Hey fellow stock guardians, it's Wednesday, April 28, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from a red stock market. As usual, I looked into what happened in the stock market today and dug into the stellar earnings results by Shopify and Pinterest, two stocks I have on my radar. All three indices finished Wednesday in the red, but the sentiment is quite positive. Facebook and Apple had fantastic earnings results after the market closed, and the Fed's chairman's confidence on the future of the labor market signaled recovery and excitement. On the list of the most viewed stock cards of the day, I noticed Shopify. Shares were up more than 11%. This is a $143 billion company, so jumping 11% in one day isn't as easy. The company released its Q1 earnings today ahead of the previously announced May 6th date. Going through the company's earnings presentation, I'm impressed by Shopify's progress. The integrations they have made into Facebook and Walmart could make a big difference in expanding the market opportunity for Shopify. You can see the results in more than double in revenue growth in Q1 2021 compared to the previous year. You can also see that the company is able to grow by upselling Shopify's other services such as Shopify lending and payment to its existing customers. By the way, on the left-hand side of each stock card, you can now see all the ETFs that company belongs to. It seems Shopify's US listed ticker is a top holding of iShares Expanded Tech Sector ETF. Of course, most ETFs buy Shopify's stock directly on the Toronto Stock Exchange if you are wondering why there is only one ETF listed on Shopify's stock card. Now the question is it a good time to buy Shopify? Well, as you can see on the company's stock card, Shopify is overvalued if you use the traditional valuation ratio. But then a well-performing stock like Shopify can stay overvalued for a long time. Keep it on your crash watch list if you have a watch list for when the market crashes like I do, or just add to your Shopify holding small and steady. That seems to be the best strategy for companies such as Shopify. Opposite to Shopify, and from the list of the biggest losers, take a look at Pinterest. Shares fell more than 14% first, and in the after hours, it settled around 9%. The company announced its earnings report yesterday. It reported excellent quarterly earnings result with revenue and monthly active users all up significantly. Investors got spooked by the management's comment that as people go back to work and won't be trapped at homes, Pinterest would lose some of its monthly active users. However, notice Pinterest's international monthly active users and revenue growth. The company has a much faster growth rate in the international markets. It's also expanded its advertising operations in markets such as Brazil and others. I'm actively watching Pinterest for a chance to pick up shares because today's stock price drop seems to be a knee-jerk reaction to a management comment. Folks, if you don't know already, this week we launched the first version of our ETF cards. You can search any ETF, see its top holdings, and add it to your watch list. Soon we'll be adding a lot more new features to our ETF cards. Don't forget to join me in Friday's meet and greet session at 1 p.m. Pacific time, or ping us on the live chat to share your feedback and requests and questions about the new ETF cards. In the meantime, please give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock card's stock pick page. Don't forget to sign up for a 14-day free trial with promo code ROLL with our CEO, all lowercase and in one word. And as always, help us grow this stock carding community by liking and subscribing and sharing these daily market recap reports with your fellow investors. I'll see you tomorrow.